Hi, my name is Mark Bonham, the Money Sandwich Coach, and welcome to this tutorial on purchasing an investment property calculator. This calculator is to be used just as an example or as a guide for some of the information you need to consider if you're looking to purchase your own investment property. It's also important to understand this is not personal financial advice, as we're just showing you how this calculator works and don't know your own situational circumstances. And of course, the performance returns or loan interest rates are never guaranteed for the future. Okay, let's get started. So we're at the moneysandwich.com website. And if you go to the right side to where it says helpful tools and click on that, go to resources and click on that. Once there, you just scroll down to the online calculators. And then if you go down, you can see on the bottom left-hand side, buy an investment property calculator, and just click on that. Okay, the calculator will come up now. So if you can see here, first of all, there's a little I. If you hit on that, that gives the information on all the considerations in this calculator. So it's important just to read through because things like stamp duty and all that are different in every state. Pardon me. So in this property, we're using a value of a property of $400,000. As I said before, stamp duty for New South Wales. But if you're in any other state, you can put that in to be able to work out your own situation. We're using a deposit of $50,000 in this, and the loan interest rate is 4%. If you're be able to get a different rate, absolutely you can put that figure in. The loan term is 25 years, and it's a principal and interest type loan, which means that the principal is also getting paid off as well as the interest. What you can also have is an interest-only loan, if that's the type one you can get. So some people want to actually lower the monthly interest rates, the interest repayments. But what that pretty well simply means is the principal and interest over 25 years, the mortgage on this, which is say $350,000, will be zero. If it's interest-only, that means that $350,000 loan will still be there. You've just been paying the interest over the 25 years. But of course, your property value will have doubled or tripled in that time. The stamp duty is grayed out because by putting the state and territory in above, it will automatically works that out. But there's purchase costs, which may be legal fees, and you can even click on the question mark there for property inspection charges, pest inspections, other costs in purchasing. So if I scroll down a bit further, the ongoing financials, we're expecting a $25,000 a year rental, and I've put that in there under yearly. If you want to put that under monthly, fortnightly, weekly, you can as well. And you'll just get some idea of whatever area that is, the typical type rent that you can have. Expected maintenance costs as well, find that out, put that figure in. And I've also on this calculator ask for your gross income. The reason is, and this is a $60,000 salary, is because if we scroll down, potential tax concessions is if you're making a loss on this, you are able to claim the difference as a tax deduction, and showing you what the tax deduction here is, just under $2,000. If I actually change that figure to say a $200,000 salary and click enter, you can see the tax deduction being a higher tax rate is $2,768. So I'll put that just back down to $60,000. Hit enter, and it's back to where it was. If I scroll down further, you can see here are the initial cost, which was $78,000, which is the $50,000 deposit, stamp duty, other government fees, and the purchase cost. The yearly financials, though, is what we're really interested in, because after that, for every year, you're going to really look at what the rental income is. That's your positive. But then there's the outgoings and the negatives, which is you're going to get a tax deduction, you're going to have to pay maintenance costs, and you're also going to have to pay the loan repayments back. But what it shows is over the 12 months, your out-of-pocket expense is $4,168. What we've been seeing of recent times is lower interest rates than 4%, and also some areas providing more rental income, maybe 5-6% rental income. And so we've seen people who are either neutrally geared or even positively geared by the end of the year. But still, at the end of the day, buying this $400,000 property your actual out-of-pocket expenses over the 12 months is $4,000, roughly $350 per month. So not a lot there. Apart from there, the individual figures, the graph actually also shows that same format. So it's quite interesting, and you can now go back and put in your own details or your own example and muck around with this calculator to see how it works for you and to see whether purchasing an investment property is a worthwhile idea. One of the things, if you want to have anything more, you can get these figures printed out. You can email us. You can also join our newsletter to get regular tips and ideas and articles on property and other money and financial ideas and stories. So I would love for you to join the newsletter. And also, if you are interested, we should give a plug for the Money Sandwich book, which if you go to the main page of this website, you can purchase through that, because that has plenty of case studies, ideas, and tips as well. Join us on our Facebook community and also look at our podcast. And we do have group coaching available as well as low-cost online courses. So there's a whole range of things that you can take from this website, even looking at the other calculators or tutorials on this to help improve your own financial situation. So best of luck with your own financial journey. And it's from Mark Bynum, the Money Sandwich Coach, saying goodbye. Thank you.